Welcome to the Money Talk Simple podcast, the show that breaks down money, wealth, and the world simply. I'm your host, Josh.
And I'm Nora.
Great to have you, Nora. Today, we're diving into a big one, a question we get all the time: crypto versus stocks.
Oh, yeah, the classic showdown, the old guard versus the new kid on the block. Where do you even start?
Well, let's start with the new kid, crypto. It's generated just massive interest in the last few years. You see headlines, you hear the stories.
Totally. It's all about these extreme cycles, right? The bull markets are insane. Prices just skyrocket. You hear about Bitcoin or Ethereum hitting these astronomical market caps. It feels very get rich quick.
It does. It's exciting. The changes are so sudden and dramatic. But what goes up
Must come down. And with crypto, it comes down hard and fast. Those peaks are almost always followed by these equally sudden crashes. And a lot of the smaller coins, the altcoins, they just disappear.
right, leaving a lot of disappointed investors. Now, to be fair, stocks have risks too. There's no such thing as a sure thing anywhere.
Of course.
But there is a huge fundamental difference between them. And it comes down to one thing. What are you actually buying? With a stock, you're buying ownership, a tiny piece of an actual business.
Yeah, a company that makes something or sells a service. It has, business results, cash reserves, a plan for growth. There's something tangible there.
Exactly. Something you can analyze. With crypto, its value is a bit more abstract, isn't it?
That's putting it mildly. For now, its market value really just boils down to supply and demand. It's worth what the next person is willing to pay you for it. That's pretty much it.
It's pure speculation. And that brings us to the next big difference: governance. Or, rules.
The stock market is old. It has over a century of regulations baked into every single transaction. There are firm rules for how you trade, how you own, even how you're taxed.
You can get a PhD in just the tax side of stocks. But the crypto market, it's like the Wild West. There's really no regulatory framework.
Not yet. I mean, the government is trying to figure it out, but they're asking these big questions like, should crypto be treated like stocks, or is it more like a currency, like the US dollar? Or does it need a whole new rule book?
And that uncertainty, it keeps a lot of the big institutional investors on the sidelines. They won't jump in until there's a clear set of rules.
Which is totally understandable. But okay, what about the actual experience? Like, for the average person, how different is it to buy crypto versus buying a stock?
On the surface, it's actually not that different. You open an account with a brokerage, you transfer money, you pick what you want, and you place an order. If you've ever bought a stock, the process will feel pretty familiar.
Right, but there are some key differences under the hood. For one, fees. Most stockbrokers got rid of trading fees years ago, but crypto brokers, they still charge you for each transaction.
That's a big one. And speed. A stock trade can happen in microseconds, but a crypto trade has to be verified on the blockchain. For something like Bitcoin, that can take several minutes.
And in a market that moves so fast, a few minutes can feel like an eternity.
It really can. So when we stack it all up, let's talk advantages. Why are people so drawn to crypto?
Well, the upside is just huge. Since it's not tied to, financial results, the sky's the limit. Everyone is hoping they're buying the next big thing. It's like trying to win the lottery.
And some people are really into the tech itself, the decentralized nature, the privacy, the smart contracts. It's advanced stuff that stocks just don't offer.
Okay, but the disadvantages are pretty serious. We talked about the lack of regulation, but there's also the security question. What happens if your crypto brokerage gets hacked? Or, and this is a common one, what if you move your crypto to a secure personal wallet and then you forget the password?
Oof, yeah, it's just gone forever. You are going to lose a lot more sleep worrying about the security of your crypto than your stock portfolio.
So what's the advice here? What should someone listening actually do?
Well, if you have zero investing experience, you probably shouldn't jump straight into the deep end with crypto. You're much better off learning the fundamentals of long-term investing in the stock market first.
Right. And if you are an experienced stock investor, maybe you could add a little crypto to your portfolio, but it should be in small nibbles and only after you've really learned everything you can about it.
There's even a way to dip your toes in without opening a crypto account at all. You can invest in well-respected public companies that are exploring crypto technology. It gives you some exposure, but with the added security of a real business operation behind it.
That's a really smart starting point. So looking ahead, where does this all go?
Things will change. Regulations for crypto are definitely on the way, but we don't know what they'll look like. Meanwhile, the stock market will just keep evolving slowly since it dealt with its growing pains decades ago.
So for now, the final word is stocks are just inherently safer. The stock market's calmer waters can still generate life-changing wealth over time.
Exactly. Keep any crypto exposure small, and remember that it's a speculative game. It's exciting, but it's largely unproven.
Great breakdown, Josh.
Thanks for tuning in. Join us next time as we unpack another idea you think you know.
And if you haven't already, hit subscribe so you don't miss what's next.